We're back on Morning Movers. Shares of Apple have rallied nearly 9% this week and are trading at the highest level since March. The company announcing a further $100 billion in manufacturing investment in the US. CEO Tim Cook appeared at the White House with President Trump on Wednesday. The domestic investment could help the company avoid the tariffs being imposed on countries like India and China, where iPhones are produced. All right, well, to take us through the trade is Tom White, senior options contributor. It seems that the art of the deal is sort of working for Apple right now, particularly when you commit to spending here. We'll give you an exemption on the tariff, so that's helped to offer a bit of tailwind here. How would you set up an example trade after all that news this week?
Yeah, I think the first thing we're going to take a look at here is a chart, because I think if you take a look at, I think Tim Cook was in the penalty box until this additional $100 billion investment. And you've seen that reaction in the shares this week. If you take a look at a one-year, one-day chart, stock's up nearly 9% so far just this week alone. It broke through the 50-day simple moving average. You can see there in the light blue earlier this week. So kind of broken through some key levels. 215 had been a big area of resistance over the past couple of months. We've broken through that to the upside. Does that propel us even farther? And then you can see the yellow line there. We've got the 200-day moving average, which is about just above 221 bucks a share. It hasn't been above that level since last March. So coming up to a key resistance area here, stock trading about 221 in the pre-market here also. So that you get to take that into consideration. And then on the bottom part of this chart, you see the relative strength index, the RSI. That's approaching the 70 level. It settled at about 66 level last night. So the trend is definitely, and momentum is to the upside in this name. Stock's still down this year, about 15%. So we'll have to wait and see if this becomes an area of resistance or breaking through that 215 level area of resistance is going to propel the stock higher.
All right, speaking of penalty boxes, I won't mention Harry Kane or Bayern Munich, but I'm just wondering what your thoughts are about an example trade on this one.
Yeah, Harry Kane missed that penalty kick yesterday. I love seeing that against my Spurs. But if you take a look at this, implied volatility level is really low here in Apple. The IV percentile rank only about 18% at this point. So it's in the bottom 1/5 of implied volatility levels that we've seen over the last 52 weeks. And that's not surprising with that 9% gain so far this week and the stock trending higher. So I looked at a strategy that's directional, that takes advantage of a low volatility environment for a directional play. In this example, I looked at a bullish trade. If you think the stock's going to break through that 200-day simple moving average and continue to move higher, I looked at a bullish call vertical where I'm going to buy in the September monthly cycle, so about 42 days to expiration. So I'm giving myself plenty of duration on this position. Buy the 220 strike call, and then against it, we're going to sell the 235 strike call. So a bullish $15 wide call vertical to the upside. You're going to pay roughly about $580 debit for that if the stock opens up here around 221. If you pay $580 debit, there's your risk, $580 per spread that can expand to $15 if it gets above 235 at expiration over the next month and a half. Now, you can see here from the break even, 225.80 to the upside. That's only about 2% above the current share price. So you don't need a big outsized move to get above that break even. And if the stock does want to go all the way up to 235, which would be max profitability on this one, that 235 level is only about 6% above the current share price in there. So like I said, it's controlled as far as the amount of risk versus the amount of reward. A pretty good setup there. Break even's only 2% above the current share price. And because you're buying a vertical like this, Sam, you have some flexibility as far as trade management goes also. You don't have to wait until expiration. If you get that move up towards above 230, above 235 prior to expiration, this will expand the price of this call vertical, allowing you to maybe close a portion or all of it ahead of expiration. So it gives you flexibility in that trade management.
Great stuff, Tom White. Thank you so much for that. And a quick snapshot of Apple and rallying nearly 9% this week on what has been a very news headline-driven week very much for this company. All right, that does it for us on Morning Movers.